Hello everybody, so this video is entitled MSTR Stock Orange Dots Matter. Did he buy the bottom? Let's go and talk about MSTR and Bitcoin today. So of course, Bitcoin's not dead after all. The rebound happened, the rebound held. We are $10,000 up from the bottom of Thursday night, right when Saylor and STRD held their conference call. There could not have been a worse timing. And of course, the stock bounced back epically, dare I say. We were up like 26 or 27% on Friday. That's because Bitcoin bounced back. The strategy, MSTR, correlates to Bitcoin. There's no other way to say it. The correlation is very, very close. This stock barely trades on the content of the earnings conference call. It trades mostly on the price of Bitcoin. It's a slow accumulation game. The more you accumulate, the more you are going to have Bitcoin, which is going to be correlated to the stock price. So it's a slow grind up. So he bought more. Where did that money come from if he bought more? So could he have ATM'd on Friday, right, after the call? I don't know. I tend to not think that he did, because there's a lot of regulatory requirements this week. So I tend to not think that he did. Could he have used some of that cash reserve on that Thursday night he talked about? He said they could do whatever they wanted with that cash reserve, including pay off the converts. So if they can do whatever they want with the $2.25 billion that they got, could they potentially have used that to buy some Bitcoin? Probably not. I think they do this for Stretch, for the creditworthiness of Stretch. So I don't think he did that either. My take is if he bought more Bitcoin, which it seems like he did because he tweeted this, although remember, one time he fooled us all. One time he had tweeted this and he had not bought Bitcoin. So anyways, that's because I think he spent the 30 million that were unspent from last week's raise. If you look at the last week's raise, he only bought 75 million last week, and he had raised 106 million. So you have almost $31 million that is unaccounted for, and my guess is that he spent that 30 million this week. So I expect a roughly $30 million buy this week. So a baby buy, a small buy, a buy that doesn't really matter. But it's all about doing it like clockwork and increasing the count, the buy count. How many weeks have you bought Bitcoin, right? And he's done that for a lot of weeks now. So by the way, if you haven't watched my video about the call, I made a video about the call. The call happened the same way that I thought, i.e. nothing new. We learned literally next to nothing on the call. There was nothing new. But very striking, of course, on the call, in my view, was epic calmness. I called my video on the call extreme calm. They literally said we'd be fine for years if Bitcoin traded at $8,000, we'd be fine for years. He literally said that on the call. So epic calmness, and of course that is to be contrasted. And I think this is still the state of Saylor and Feng Li and team, is that they are super calm, and that is to be contrasted with crypto, which is still in extreme fear territory. We bounced back from the Friday low, but whoa, we're still in extreme fear, and I expect this fear to abate at some point. We are definitely still in extreme fear. In my view, that means Bitcoin is in a deep value territory at this point. In my view, that's kind of what it means. But Saylor are calm. Saylor and team are calm here. So anyways, let's talk about Stretch. Saylor advertised Stretch again yesterday, talked about Stretch. And Stretch, of course, as I've said in my video, it's for those who can't handle the G's. It's for those who can't handle the G's. They can't handle the pain when the car accelerates, when the rocket accelerates. They don't want to handle the G's. They don't want to feel the weight of the acceleration. It's painful. And some people really don't like that, right? That's the whole point. And of course, he compares Saylor to like a fighter jet, like a spaceship. And if you want to have less G's, you could board Stretch. Stretch has had epic performance, by the way, and I want to spend a second talking about that. of course, because people judge MSTR stock performance as poor, and they start screaming Ponzi and getting mad because they judge MSTR stock performance. But if you know the stock, you know for now 6 months, Saylor has been all in on stretch. And if you actually look at stretch performance, and let's remember, STRD, the corporation, has issued MSTR stock. It has also issued stretch preferred stock, right? So we should also judge STRD, the company, on the different issues that they have, right? And they've issued their preferreds, they've issued the common, right? And I happen to believe it's I like Strike more and more personally. That's kind of like an instrument that I love a lot about strategy. So, and there might be more issues coming up. So it's important to figure out when we judge the company strategy, what do we actually judge? Do we judge MSTR or do we judge STRC? Maybe I should have called this video STRC stock and said, oh, STRC greatly outperforms. It is issued by strategy. It's important to note STRC, if you annualize the gains of STRC, you are now at 20%. So STRC is actually beating the NASDAQ right now. If you look at the total return for the 6 months, it's more than 10% for STRC versus minus 65% for MSTR. So STRC has really, really worked well. It works to remove all of the volatility. And furthermore, of course, if you don't sell strategy, you're not going to have capital gains if you don't sell it, right? And if you bought at the top, you definitely don't have capital gains. But here's another great deal, of course, about STRC and all of the preferred is that they are tax deferred. So essentially, for the first, let's call it 10 years, let's assume a 10% yield long term. Essentially, for the first 10 years, you don't pay taxes. It's tax deferred. You reduce your cost basis. And that's obviously if you're based in the US. I don't know how other countries are going to treat it. But it's important to realize the many benefits that STRC has, especially if you adopt a dividend reinvestment strategy, a monthly reinvestment strategy. It could smoothen the price of MSTR if you decide to take that money and put it back at MSTR. It could smoothen the price of STRC if you decide to take that money and put it in STRC as well. Anyways, another final thought about the G's and another way to think about it. This came up just now. You may know if you fly a business class or first class, you may know that if you're sitting at the front of the plane, it's much more comfortable. It's a much more comfortable ride at the front of a plane. And if you ever buy seats on airplanes, you know that the free seats are the seats where you don't have to pay anything in general or next to nothing. They're at the back of the plane. They're all the way back. All the way back in the plane is always more bumpy than the front seats, which are usually business class seats or first class seats, right? Well, look at that rocket, and that rocket entirely makes sense. You got the back of the rocket, who's really, really bumpy. BTC, MSTR, BTC derivatives being the bumpiest thing out here, right? So this is bumpy. And you have the front of the rocket, which is very much less bumpy. And note how stretch is the least bumpy of the instruments. So I think that's another way to think about this is sit in front of a rocket if you can't handle the shaking. Right? If you can handle the rocket shaking, you can sit at the back of the rocket and sit on the MSTR train. Or if you're really, really adventurous, you can go ahead and get some options. If you're very adventurous because imagine you see MSTR, plus 26% yesterday. Imagine if you had out of the money options expiring soon or something. Insane volatility that you would get. And so that would be the derivatives, which is even further back in the back of the rocket. So I think it's a good analogy. And of course, Saylor is all about reasoning by analogy. That's his big thing here. Let's talk about another tweet from Saylor that he put on earnings day talking about digital capital versus physical capital, digital credit versus conventional credit, and MSTR, amplified Bitcoin versus wrapped Bitcoin. So just to address this a little bit, of course, if you're a Bitcoiner, you don't need any explanation about digital capital. There's dozens of reasons as to why it's better. But as far as capital is concerned, the main ways to think about why it's better, it's, of course, you don't pay property tax, you don't pay insurance, you don't pay maintenance. It's portable, so if the politicians change, you can just change states, change countries. It's not stealable in the sense that you need an army of countries. You would need the world's most thermodynamically strong army of computers and silicon in order to just invalidate one transaction on the Bitcoin blockchain. And of course, that's for raw form Bitcoin with proper OPSEC, right? Proper security. People say, oh, it's stealable. Well, if it's stealable, you didn't do proper security. If you do proper security, Bitcoin is technically protected by the laws of thermodynamics, and we've reached an escape point where the 50% attack is not a thing. Anyways, this is not a theoretical, topic discussion of Bitcoin. It's not theoretical, but it's important to realize that, BTC was designed to be better than physical property in every single way. Then you have Stretch. Stretch is Bitcoin-backed credit. And it's logical that if Bitcoin is the best property, then credit backed by backed by Bitcoin should be the best credit. And it's better than, say, for example, real estate backed credit like mortgage-backed securities, right? Do you want to buy a basket of mortgage-backed securities? How do you know that on average the people who borrowed money, typically 95% LTV typically, to buy an overpriced house, how do you know that they're going to be able to repay the house? How do you know they're not going to walk away? What if you buy a mortgage that was issued in Austin, Texas in late 2021, and they bought $1 million house, and that house is now worth $550 maybe, and the tech workers lost their job? What happens to the value of that debt, right? That's an issue. Same issues for companies, right? Cash flow backed debt. What do you do if you invest in, I don't know, look at Legacy Auto right now. Look at Stellantis. Stellantis trending for a $26 billion write-down, taking huge losses on investments that they did in the auto business. When you have cash flow backed debt or debt that you take to invest in future cash flows, and the future cash flows don't happen, think about how much risk you're taking, right? The closest thing to Bitcoin-backed debt would be gold-backed debt. And I believe, of course, that Bitcoin is better than gold, so Bitcoin-backed debt would be better than gold-backed debt. But that would be the only close thing. Gold-backed debt would be the only close thing to Bitcoin-backed debt. But gold-backed debt does not exist anymore. I mean, it's not a thing anymore. It used to be the main thing. It used to be the main deal in debt, but it doesn't really exist anymore. And then, of course, Saylor throws us kind of a throwback quote talking about MSTR versus wrapped Bitcoin. Frankly, it's easy to argue that tons of things are better than wrapped Bitcoin. It's a throwback quote. So if you don't know what wrapped Bitcoin is, it's Bitcoin trading on ETH. And so if you take your Bitcoin, you go on WBTC, you transfer your Bitcoin, and you turn it into wrapped Bitcoin. So already, risky thing. Think about all of the issues that can happen. And then you have wrapped Bitcoin. And then what do? You can lend it. You can stake it. You can create liquidity tokens. Let's say you have stable coins and you have wrapped Bitcoin. You can create a pair, create a liquidity token, list it on a decentralized platform, or a DeFi platform, a DeFi exchange. You can earn yield. You can even borrow against it to get stable coins, right? And of course, we know you can also own MSTR on TradFi rails and borrow against your MSTR via margin, for example. And so the key is which one is better. And Saylor argues, of course, that right now TradFi is better because right now TradFi is regulated in a way that DeFi is not regulated. I think this could very much change in the future. I think in the future we could see Saylor issuing MSTR stock directly on the blockchain. So I think this could change in the future. But today, wrapped BTC is often a case of return-free risk, to quote Saylor. And, it's still a little bit of a Wild West today. And I would argue wrapped BTC, or the movement of wrapping BTC on other layer ones, on smart contracts, layer ones really, that movement is not as strong as it used to be, I would argue. So to me, it's a no-brainer. Everything that Saylor says here, I wholeheartedly agree with. So anyways, and let's conclude. Let's conclude with a trending article over the weekend here. Trending all over the internet. I saw it everywhere. Some skeptics still don't get it. Some skeptics still don't get it. And you have this, I think it's a little appalling for an article in 2026, honestly. Bitcoin is still about 70,000 too high. So we are in 2026, and you still have people who are saying that Bitcoin is going to go to zero. Bitcoin is going to go to zero. So I don't know what it is with the Financial Times hating on Bitcoin so much. Like, you may remember 6 months ago, they had an entire documentary that was anti-Bitcoin, where they compared Bitcoin to teeth, and the journalist was saying that one of her teeth, any of her random teeth, was more valuable than Bitcoin. So that's why I call, Financial Times, I call it a valuably teethed newspaper for sure. The journalists, they are valuable teeth. I'm so confused. Again, of course, I'm $75 a month to read this. Oh my goodness. Oh my goodness. Thank goodness for these paywalls sometimes. Thank goodness for these paywalls. Frankly, they should charge a little more than that for that type of article. So anyways, the FUD continues. It always does, but eventually the FUD dies. You like I said in my prior videos, you still don't have anybody telling you to not adopt electricity. Electricity is adopted by everybody. One day this will happen for Bitcoin, but we probably have another decade of fighting the FUD. So anyways, this was not investment advice. This is not financial advice. This is only entertainment. I'm hoping you're entertained. Please like, please subscribe, follow me on Patreon, follow me on X. Thank you so much for watching, and have a wonderful, wonderful day.